Hello everyone, thank you for joining us on this Tuesday and welcome to this educational presentation of how to kick your trading into overdrive. Now I know a lot of you may think that in order to reach these higher levels of trading you really have to have some advanced tools and some really complicated type of system that there are tons of rules that you must follow in order to get to that higher level. Well, I've been trading for 43 years now, and one thing I've learned is that it's actually the opposite. The simpler you make your trading plan, the less rules you have and the less indicators and just the basics in front of you, actually that's where you will have a higher level of consistency. For example, let me share with you this technique today for kicking your trading into overdrive. Here's an older chart of the Dow going back this past year, okay? Now someone looking at this would say, well, not much really happening here, Steve, in the last couple of weeks, kind of going up, kind of going down, really not a great idea to trade this. Well, with the technique I'm going to share with you today, a sell signal was generated right here at the very top of that day, and it went down for a couple of days, but then another one was generated 2 days later, and you would have been able to potentially take advantage of this because 2 days later, the Dow dropped over 800 points. It was the worst loss of the year as investors feared a global recession. Lots of news was coming out about a recession. This was in late summer of this year, and as you can see, the market fell 800 points. So you stood to make a very nice gain had you been short on those particular days. Now, I know a lot of you will say, well, sure, I mean, how are you able to find this or get these setups? Well, all these setups I'm going to be sharing with you today, upwards of about over 100, were generated using our new PTS Primo charting platform. This is the educational platform you've been searching for because it really teaches you how to kick your trading into overdrive. So welcome. Thanks for joining us a day early on this Tuesday. I usually give my presentations on Wednesday, but because of the holiday, we'd like to give you an extra time if you're going out of town to view our educational presentations. My name is Steven Primo, President and Founder of Specialist Trading. I've been trading now for 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. Now, if you're wondering what a specialist is or if he's more special than anyone else, it doesn't mean any of that. If you ever look at the old pictures of the traders on the floor where there's yelling and screaming and making all these hand signals and paper all over the floor, well, that's what a floor trader or a specialist was. In other words, if you wanted to buy or sell a stock, you had to go up to the trader, the floor broker had to go up to the trader who specialized in making a market. So he had to either buy or sell whatever you wanted to do. So that's what I did. I made markets in roughly about 60 stocks. I made markets during the crash of 1987. I made markets in the bull market that followed after that. So in my 43 years of trading, while I was on the floor for 16 years, I saw just about every market environment, straight up, straight down, sideways. I also saw just about every system or trading technique you can think of. And trust me, if you've just purchased a $10,000 course, online course, you've gone to a class, or if you've purchased a book about some new and innovative idea of trading, I can almost guarantee it's been around already. It's just been rebranded and been retitled, and it's pretty much the same old stuff. So someone would say, well, Steve, what do you have at Specialist Trading that's any different? Well, all we do in my 43 years, I've accumulated all of this knowledge, and I know what works in terms of consistency, and I know what doesn't work. I know what I shouldn't waste my time with. So all we do at Specialist Trading and my sister site, Pro Trader Strategies, is educate our students around the world in over 115 countries and in virtually every state, all of the things I've accumulated that have high levels of consistency. So that's why we say we are first and foremost an educational company. We're not in any way trying to tell you we have the system that never fails, that no one's ever thought of, or we know the perfect market to trade in the perfect time frame. We don't believe in that. In fact, that, in my opinion, is a recipe for disaster. What we want to do is simply educate you and give you the things that have stood the test of time. Techniques and strategies that I've been using for over 4 decades now. And if they're working for me, if I'm still here, I'm sure they can work for you. Now, in today's presentation, I'm going to share with you a very, very simple technique that really is extremely powerful, and you'll see just has a couple of rules to it, but you'll see how powerful it is in trading any market and any time frame. But before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a moment to view our required disclaimer, if you haven't done so already, I invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different trading educational information on a daily basis, little bits of financial wisdom to signals our strategies have generated. Lots of great free education, so please feel free to follow us on Twitter. Excuse me. Now remember, as I stated in the opening statements, we are first and foremost an educational company with my only goal to simply teach you how to trade with a specialist edge. This is the same edge that was taught to me some 4 decades ago, and what I truly believe has been the cornerstone to sustaining me. So if it was able to sustain me, I think it can be able to sustain you as well. Now this cornerstone, the specialist edge, is built in simplicity, okay? It's not about having these complicated systematic trading ideals. It's more about really stripping away all of that and making things as simple as possible. And I'm going to share with you just how simple it can be in today's presentation. Now, before we begin, since this is going to be an educational classroom, if you're new to my webinars, I like to take all of your questions, but I like to take them at the very end of class, okay? I don't want to bog you down stopping at every slide for a question. We'll be here far too long. Maybe a lot of you are leaving town or quitting for the day. It's very slow. So if you have a question, please write it down and try to remember it. I promise I'll get to each and every one at the very end of today's class. Now, the only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early, if you're having technical issues, we will send each and every one of you a link to this recording, all right? Okay, so with that said, please wait till the end to ask your questions, and let's begin. Now, I want to talk about the short-term trend because that's what this technique I'm going to be sharing with you today has to deal with. So first of all, someone would say, well, Steve, how does one find the true short-term trend? Because everyone and their relative has a different idea of what the short-term trend is. Some people like to look at price patterns. Other people like to look at higher time frames to define what the lower time frame should be doing. Let me share with you what in my 43 years of trading I have found is the best tool for deciphering the short-term trend in any market and in any time frame. For example, let's look at this chart here in Zion, okay? Someone looking at this would say, well, Steve, yes, I'm convinced we're in a short-term downtrend, so you don't have to give me any indicators or tools. I know we're going down. So obviously, someone would either want to stay away from this, not purchase it, or maybe even consider shorting it. And just when you make that decision, look what happens, right? All right. What if they're a tool not designed to pick the top or the bottom, but at least could give you an early warning or an early trend detection as to what the short term is? Well, there is. Because in order to trade in sync with the current trend, what we need is a tool that translates what the market wants to do. Because see, most of the tools or indicators or techniques that determine the short-term trend are based off of lagging indicators or lagging techniques. The reason is because they're not listening to what the market wants to do. They're not translating. So what we need is something that translates what the market simply wants to do, and then we can just follow along with it. Well, there is, and that tool is the PET-D. The PET-D stands for the Primo Early Trend Detector. Now, it wasn't titled that when I first started learning about this. It was some 40 years ago on the floor of the exchange. My mentors, specialists themselves, taught me this. We used to call it the formula because it was the calculation we had to calculate it on almost a tick-by-tick basis. But we don't want you to do that. We've taken the hard work out of that for you. So we've really pre-formatted to be a color bar algorithm. So everything is just pre-formatted. So what exactly is it? It's a proprietary algorithm. Once again, we've taken out of the hard work so that you don't have to worry about this formula that must be calculated on just about every tick. And we've designed it into a color bar tool. Now, it'll automatically color the bars of any market you're looking at. It could be a stock, a future, a currency pair, a Bitcoin, commodity. It makes no difference, and it makes no difference what time frame. If you have a series of red bars, it's telling you that the short-term trend is down. A series of green bars, the short-term trend is up, okay? Now, one of the ways we can use this is for confirming a signal. So it's a signal confirmation tool. So regardless of what method of strategy, we don't care what it's based off of, it can confirm your signal. So if you get a buy signal, let's say it's based off fundamental news, you want to make sure that the bars are colored green. You don't want to have a buy signal with the bars colored red and vice versa. It's a great tool for doing this. But excuse me, the technique I'm going to share with you today is based on the early trend detection. This is where it's so powerful and so simple at the same time. All right, let's look at this chart again, once again, and someone's saying, well, how could we have used the PET-D to help us? Well, all you have to do is simply click on the PET-D on our PTS Primo charting platform, and the colors automatically appear. As you can see, that early trend was determined well in advance, where most people would say we're in a downtrend, and you would have known well in advance with a series of green bars that the trend had changed. So as it says here, the beauty of the PET-D is that it tells you which direction you should be trading. And then once you know that direction, you can virtually apply any technique that is in sync with that direction. I know a lot of you would say, well, Steve, I don't really have any techniques. I spent so much money on this system or this strategy, thousands of dollars. I'm ashamed to tell you how much. And I don't have any techniques that can really, apply it now. Nothing that I seem to trade works. Well, let me share with you a great technique based off of using the PET-D, okay? This is the trading technique I'm going to share with you. I'm actually giving you all the rules today. All right, let's say you want to be a buyer. Well, here are the setup rules for this. Remember, this is a technique. When I say technique, let me share with you what the difference is between a technique and a strategy, or a technique and a system. A strategy and a system come already pre-formatted with all the rules. In other words, all the pieces of the puzzle. They tell you exactly where to get in, exactly where to get out, exactly where to place your stop, how to manage the money, how many shares or how many contracts to buy or sell. That's a full-fledged strategy or a full-fledged system. A technique differs in the fact that it's only one of those pieces of the puzzle. It's basically just highlighting a high probability setup. How you enter, how you exit, and how you place your stop is entirely up to you. So that's the difference between a technique and a strategy. Today, we're just going to be talking about a high probability technique. Now, let's say you want to go long. All right, here are the qualifications you must have. First of all, you need to see a green bar colored by the PET-D that closes below the previous green bar's low. Okay, so we're looking at basically two bars as we look at this generic chart right here. All right. Now, these two bars, if we add the PET-D, must both be colored green. Now, as you can see, here's bar 1 and bar 2. Here is the low of bar 1, as we have this horizontal dotted line here. Look where the close of bar 2 is. The close is completely below the low, not the open or not the open to close range, but the low, the actual high to low range, not the open to close, but extreme high to extreme low. You want to see the next bar close below, and it must be colored green as well. So both bars need to be colored green. If you see these qualifications, that's a buy setup. That's how simple it is, okay? You can decide to go long wherever you like. You can buy at the market. You can place a limit a little bit lower. You can wait for it to confirm once it trades above here. It's entirely up to you. But this is a high probability buy setup. All right, let's look at the opposite side. What if we're going short or looking to sell? Well, we want to look at two bars again, and they must be colored red. Now, a red bar, the second red bar, must now close above the previous bar's red bar's high. So once again, we look at these two generic bars here, bar 1 and bar 2. We apply the PET-D, and we see that they're both colored red. Now, since this was an up day, someone could say, well, Steve, why is this outlined red? It's an up day. Shouldn't it be filled in green? No, that is the way the platform's designed, to make it easy for you so that you could know when trading candlesticks roughly 30, 40 years ago when candlesticks got popular, so that you would understand the process that this was an up day. Because up until that time, it was just basically open, high, low, close charts. No one really understood the concept of candles. Once the public was introduced to it, they had a very difficult time understanding what a down day was and what an up day was. So they said, we have a smart idea in the West, because in the East, where candlesticks came from, they never used this. But in the West, they said, since Westerners are having a hard time, a down day will be colored red and an up day will be colored green. Well, that, in my opinion, was the worst thing they could have done, because it goes counter to the trend. Because we see here that this is an up day. We open here and we close higher. But we're not filling it in green. All you need to know is that it's hollow. But since it's outlined red, what is it telling you? It's telling you that it's an up day in a short-term downtrend. So this is a tremendous clue that the PET-D gives you. We don't want to color this bar green. We want to outline it red. And you know it's up because the background of the chart is colored the same color as the open body. So this is the way we use our charts for candlesticks on the PTS Pro Trader Strategies platform. It's specifically designed old school, the way I was taught some 43 years ago, how to trade candlesticks. You never fill an up day green and a down day red, because that you'll never know what the trend is. So a down day can still be colored green. Now this is a down day, but it's colored red because it's in a short-term downtrend. You're getting two pieces of information. We will close down and we're in a downtrend. Now the other piece of information is we closed up and we're in a downtrend still. All right, so let's look at the high of bar number 1. All right, we draw this horizontal bar across and we see that we closed above that and that both bars are colored or outlined red. So this is telling us this is a high probability sell setup. Doesn't get any simpler than this, okay? You can sell wherever you like, either in the close, somewhere, place a limit higher if it goes up a couple of bars higher, or maybe for confirmation down here. It's up to you. All right, so let's go back and look at that example that happened in late summer this past year in the Dow, all right? How did we know to sell these two bars here at the very top before that 800 to 1,000 point drop in the Dow happened? Well, first thing we do is we color the bars with the PET D. As you see here on our platform, the PET D is right here. You just simply click on this tab and it automatically colors the bars. So you see that even though we've been going sideways and even though we've had 1, 2, 3 up days in a row, what was the outline of each of these days? They were all outlined red. So that was the market telling you that, the translator of the PET D saying that even though we have some up days here, the trend is down. Don't get caught into thinking that we have up days, we better get ready to go long. These up days should be viewed as selling opportunities, not buying opportunities. Now, if we use our technique, we see here that we had a close. Here's the high and the close above it. And then we had another one here, a close and then a high, I should say, and then a close above it. So these are the two valid sell signals using the technique I just shared with you. They're both colored red. Bar number 2 closes higher than the high of bar number 1 on both of these. So you could have sold up here if you wanted to go short at the very high, and the same here, and then taken advantage of the 800 point drop. And someone could say, well, how did you know? Was there some news you knew about the economic reports, maybe the jobless claims, maybe the earnings on the stocks, maybe it was earnings seasons? No, we don't look at that. Remember, we try to keep our trading as simple as possible. I used to look at earnings 43 years ago, and guess what? I was in charge of making markets in over 60 stocks. I had to know the earnings and what was going on with the inner workings of the company and all of those equities. So I thought, hey, that's the way I'll make money, by having these estimates of the earnings on all these stocks, and I'll know exactly what their estimations are, and that'll help me. They didn't help me at all. So many times I'd have good earnings estimates, and then the earnings would come out and they'd be great. So I'd buy the stock, and the stock would go straight down, and vice versa. That sound familiar to anyone else? That ever happened to you? That's because there's no consistency in that. They're too discretionary. Everyone has a different idea of what earnings mean. We want things that are cut and dry, like red bars that close higher than the previous day's high, okay? This is telling you that the move up is overextended in a short-term downtrend, right here and right here. And then when it was reversion to the mean, look what happened. You got short before price came down. See, the market tells you just about everything you need to know. That's what my mentors taught me some 4 decades ago. And it was hard, to adjust to that. And it was a concept I had a very difficult time adjusting to. But once I did, that's when my trading started to become consistent. So after I saw how well it worked, I let go of all these things, like listening to all these gurus, listening to what the institutions were doing, looking at volume, looking at earnings reports, looking at the jobless claims. I haven't looked at those things in 40 years. And I'm still here trading and teaching people the same things that help me. So if they worked for me for 4 decades, I think they can help you as well. All right, so let's look at some more of these technique examples. Most of these happened within the last year. Later on in the presentation, I'll show you things that happened within the last couple of weeks, okay? All right, and remember, all the examples you've seen today were taken directly from using our PTS Primo charts and really applying the PET D and seeing how simple everything is with one-click access, okay? This is the educational platform that teaches you how to trade. All right, so let's look at this example in Roku, R-O-K-U. Someone looking at this would say, wow, Steve, we're way overbought. All the indicators I follow, that $10,000 tool I bought that tells me when something is overbought or oversold says this is way overbought. So I'm going to sell this. It's gone up way too quickly and way too soon. And it's time for it to come back. Maybe it's going to fill in this gap right down here. So I'm a seller, okay? This is the way most people make their trading decisions. Well, how do we make ours? We only listen to the market. Let's use our translator, the Pet D. On our platform, it's as simple as clicking on this tab and the colors automatically change. So I don't care if some guy in a chat room, some guy in TV, or some master indicator is telling you that it's overbought. The Pet D is telling you the short-term trend is up. And if the short-term trend is up, we don't want to fight it. We don't want to swim upstream. We don't want to try and, stand in the way of a speeding train. We're going to go with it. But we have to add a little structure in the terms of our technique that I shared with you just a few moments ago. So what do we have here? We have a bunch of green bars. We're looking for a bar that closes below the previous bar's low, and it's right here. Here's the low of bar 1, and we closed below that. So according to the technique, that's a buy setup. All right? You can buy it wherever you like. So in all actuality, forget about that indicator that says this is overbought. Forget about that guy in the trading room that says you should sell this. This is a buy setup. And the stock quickly went up 23 more points, okay? To see how you don't need to listen to these outside sources, remember, I used to do the same thing. And I couldn't make a dime using these worn out conventional wisdom techniques. So why not just listen to the market? The beauty of this is, if the trend is strong enough, you'll see more setups generated along the way. All right, here's an example in Apple. Now, this is an older example when Apple was going lower. Someone could look at this and say, well, Steve, that chat room I go to says Apple is now tremendously oversold. And on top of that, here is major, major support. In fact, that $10,000 online class I took that talks about the institutions says that all the institutions are buying here. And you never want to go against the institutions, right? Because they're always right. So I'm going to be a buyer. And on top of that, look, we have 2 up days, a bullish engulfing pattern. I mean, there's just tons of signs telling me I got to buy this. Most likely going to come all the way back up here. So I'm a buyer in Apple. All right. Sound familiar, right? This is the way 99.9% of all traders make their trading decision. Not one of those decisions was based off the market. They were all based off of what someone else is telling you, but they're not based off the chart in front of you. What is the chart in front of you translating to you? Well, let's use our translator. Click on the Pet D, and where everyone else thinks this is a buying opportunity, what is the translator telling you? It's telling you that each and every one of these bars is red. Okay? Now, for this technique, we don't need all of the bars to be red, but this is a sign that we are in a short-term downtrend. And look at the updates. Here we closed higher. Here we closed higher. We closed higher here and here, but all these higher closes are colored red. Now, how well did this update, if it would have been colored green, you would have thought, hey, well, that's an update that's positive, right? That's the beauty of the Pet D. We're showing you 2 updates here that are outlined red, and look what happened after that, okay? It's just telling you that don't get fooled because you see an update colored green the way, the westernized candlesticks are. That really is no way the way in which candlesticks were originally meant to be viewed. Candlesticks were meant to be viewed as a hollow up day and a black down day. That's it. So let's see if we have our technique in place. Well, we're looking for a high and then a next bar that closes above that high. We have that right here. Here's the high of this bar, and then the second bar closes above. So where everyone else is saying, well, Steve, the institutions, all the banks, they love this. We're not listening to that anymore. We're just listening to the chart in front of us because this is the source. This is what we're trading. That's the only thing we have to listen to. So we're going to sell. It's a nice 20 points to the downside. What happened to all the support? What happened to all the Fibonacci support? What happened to all the banks and institutions buying? I used to trade with those things years ago. They didn't help me, so I'm here to really help you so you won't have to waste your time and your hard-earned money. I'm almost embarrassed to tell you how much money I wasted 40 years ago trying to buy the Holy Grail and some system that never supposed to have lost in the last 20 years and something that listened to volume and institutions. Trust me, it doesn't work. And if you missed that one, once again, there's always other chances to get back in. Here's an example in PDD, all right? Looks like we're kind of basically going sideways here, maybe rolling over. Well, if we add the Pet D, we see that all the bars are green. So the market is actually telling us we're still in a short-term uptrend, even though we've been going sideways. Well, we look for a bar that closes below the previous bar's low, and that's right here. As a buy setup, 10 quick points in the next week or so. How about this example in CGC, all right? Looks like Apple, the same thing. We're making a bottom, right? This is support or maybe a reversal. We hit a bottom right here and we're reversing to go back up. If we apply the PET D, it's the same thing. All the bars are red. Even the last 3 days closed up, but they're all colored red. So we don't want to get caught into thinking that, wow, we have 3 up days in a row. That's a good sign, right? Actually, in a short-term downtrend, that's a selling opportunity. We find our technique here where we have a high and then the next bar closes above. So where everyone else thinks is a reversal, we're selling 13 quick points to the downside. And as I said earlier, if the trend is strong enough, you will see more and more setups generated along the way. Now, here's an example in CREE. This is what we mean by consistency. All of our methods are consistent. So does that mean that they always win and they always make money? No. Consistency means that you are aware that you will have losses. But what you want is a consistent method that's able to recoup those losses, often on the very next setup. For example, we have a setup right here to go short, all right? A red bar. The next bar closes higher than the previous bar's high. So that's a sell setup. Now, if you had gone short on the close, well, you had one day where nothing much happened, but then the next day, if you had a tight enough stop, you most likely were stopped down, all right? Rather than, saying this stuff doesn't work and going in the corner and pouting, you have to remain, vigilant. You have to look for other setups because a week later, another setup was generated right here, and then days later, another one was generated. So you had one generated that produced a loss, but you have 2 more where nothing much is happening. And look at that. It finally kicked in. So sometimes it takes a little bit of time for this technique to kick in. All right? But do you think you could have made back what you lost in the initial trade if you potentially could have captured 16 points? I think the answer is yes. All right, let's look at this example in PSA. We originally have all red bars. So we're looking for an example to go short, but we don't have any setups. Bars are not closing above the previous bar's high. Now the bars change to green. So what is happening? Well, the market is telling us, not some guy in a chat room, not some guy in TV, the source, the chart in front of us, the market is telling us now it wants to go higher. It's changed its mind. And so who are we to fight with it? Who are we to tell it that, no, you're not going to go higher. You're too overbought now. Now you have to come lower. We just jump on board. We don't care which direction as traders the market's going. We just want to make sure that we're in sync with whatever it wants to do. So now it's telling us that most likely there's an uptrend in place. And what do we have here? We have a bar, low, and then we have it closing below its low. So this is a buy setup, all right? If you would have bought PSA in the next couple of weeks, 2 to 3 weeks, 20 points to the upside. All right, let's look at an example in KMPR. Here's the setup, a high, and then the second bar closes above that. They're both colored red, 14 quick points to the downside. Another example, SHOP, all the bars are green. Someone could say, but Steve, this is a down day. Why is it colored green? Because it's a down day in a short-term uptrend, okay? That's like having in the middle of the summer one cold day. Just because in the middle of July you have a cold day, maybe in the 60s, does that tell you that summer is over? No, it's just telling you that this is an aberration. Most likely we're going to go back up to 80, 90 degrees in the next couple of days. That's the same concept here. Just because you have a down day does not mean the trend is down. It just means that you have one down day in a short-term uptrend. So it meets the rules of the technique I share with you. This is actually a buying opportunity. Had you bought SHOP here, 57 points in the next couple of weeks. Not a bad little setup, right? How about this example in Google? Now we know that Google is an expensive stock and not everyone can purchase 1,000 shares. Let's say you wanted to buy some options. Maybe you wanted to buy calls or puts, okay? Or let's just say this is a great teaching experience just to know exactly how this concept works in any market or time frame. Someone could say, well, Steve, I don't have really a good idea here. I'm only looking at 5 bars. How can I come up with a good idea of Google? Well, you can if you apply the PET D, because you'll see we had a green bar here, but then the bars change to red, okay? But then if we're looking for our technique, well, what do we have? We have a close here, and the high and bar number 2's close is above. So you could have gone short Google right here, just knowing off these 2 bars the information, 123 points coming into the next couple of weeks. Not a bad little trade, right? just based off this little pattern along with what the market is telling you the short-term trend is. You think the PET D is a valuable tool to have? Now, let's look at some other time frames and some other markets, because we know not everyone just trades daily bars. Let's look at a weekly bar of the same stock, Google, all right? This is coming into this last week in November. Now, obviously, in hindsight, we've been going higher. Could we have taken advantage of this? Well, sure. All you had to do was apply the PET D, click it on here, and right back here at the end of September, what do we have? Well, all the bars are green, and we had a low here, and we closed below that. So at the end of September, just a couple of months ago, you could have purchased called or maybe purchased one share of the stock, but that was 130 points coming into this past week. How about a weekly chart of TA? All right, obviously it looks like we're going down coming into June, July, and the summer in a weekly time frame. But someone's saying, well, Steve, I like divergence. I took that $5,000 course on divergence, and the indicators I use to confirm the lows don't match up. In fact, it's not confirming the second low. We have a low here and a low here, but the indicator I use does not confirm this low, so I'm going to be a buyer, okay? It looks like we've hit some type of bottom here, and it's probably going to come all the way back up. Okay. I traded divergence years ago. I could never find any consistency in divergence. It's just too complicated, and there's too much discretion. Why not use things that are cut and dry, like either seeing red or green? Well, we apply the PET D. We see here that there's no divergence. All the bars are red. The short-term trend is down. Why? Because the market's telling us that it wants to go lower. Remember, the PET D is simply a translator. It does not predict how high or how low something will go. It does not tell you, where to buy or where to sell. It only tells you the trend, tells you what it wants to do. We simply apply some techniques in the form of this structure to get in. That's all we're doing. So if the market wants to go lower, who are we to fight it? Who are we to say, well, no, this will not go any lower? Who are we to try and catch a falling knife? All we want to do is go with it. So let's look for this technique. We have two right here. We have one right here. This was in April. And then we have another one here that was in June. Now coming into November, as you see down here on a weekly time frame, you could have generated a 13-point nice little gain here. Now, what a lot of our students like to do is when they're caught being long in a stock, let's say something they're investing in, and they don't know how to get out, well, they use this as a way to exit the trade. So if you were long, let's say TA, and you had bought it 5 points higher, you could have exited and saved yourself a loss of 13 more points, okay? And if you missed that, look at all the different chances you had to get out later. Now, here's an older chart of the E-mini futures. Here's a 30-minute time frame, all right? Just because we switch markets and we switch time frames does not mean we change this technique. We apply the PET D where everyone thinks there's resistance. The PET D is actually telling us, no, we're in a short-term uptrend. There's no resistance. The market's telling us we want to go higher. Now, if we apply the technique, look at all the buy setups we have here. Had we taken these very first few right here, 44 points or roughly $2,200 per contract we could have potentially made had we stayed in long enough in just 2 days. And remember, in our courses, we give you different exit points, and it's up to you to decide where you want to get out. Remember, we're not telling you how to trade. We're teaching you high probability setups. Here's an example in the Australian dollar, a 4-hour chart of the Australian dollar, a currency pair. Once again, nothing changes. Now, someone looking at this would say, wait a minute, Steve, I like candlesticks. I've studied candlesticks, okay? This is a morning star. Well, it's a morning star in a short-term downtrend. So we're not going to purchase anything. This is not some type of reversal pattern. We are actually in a short-term downtrend. Even though this last day is up, it's outlined red. And in all actuality, it's a sell setup because it's the technique we just taught you. The red bar closed above the previous high of the red bar. So if you had sold the Australian dollar, that's nearly $1,000 per contract, or 95 pips potentially you could have captured. And another one along the way if you missed the first one. Here's an example in a live cattle, okay? Because we know some people like to trade commodities. We have a lot of commodity traders in our courses, okay? All of our techniques can be applied to any market, any time frame. Now, someone looking at this live cattle chart, this was in September coming into October of this year, would say, well, Steve, look at this gap up. I mean, we've gone up way too quickly. All right, I'm bullish on live cattle, but I'm not going to buy it here because there's a gap. Most likely we're going to come down and fill that gap. We may even test this low again. So I think it's a little bit too high right now. I'm going to wait. All right. It's probably going to come down and I'll buy it on the pullback. Okay. Well, what's the market telling us? We apply the PET D. The market's saying, listen, you may miss it because this is a short-term uptrend. And sure, you can wait for a pullback, but if you miss it, you're going to miss these two buy signals right here at the very top where everyone else is saying it's too high. Well, it still went up 22 points, 22 basis points. That represented thousands of dollars in cattle. Now, here's an example in the spiders, okay? Because you can use this for ETFs. The spiders is the stock that represents the S&P 500. You think this could have helped you earlier this year. Now, we had a nice run-up in the S&P 500 as represented by the spiders. As you can see, we apply the PET D and look at the nice uptrend that was signaled by the green bars. And while it was going up, look at the signals here. That's roughly about 10 points you could have made in the spiders that roughly came out to about, I'd say about 600-700 points in the Dow, okay? Now, what happened next? Change in trend, okay? Now, it fell 19 points, which translated over into 1,800 points in 1 month, a drop. This is where most students say, well, Steve, gosh, things changed so quickly, then I lost money. I didn't know how to make money to the downside. Well, look at the two sell signals you had here. One here and another one here. You could have easily taken advantage of this 1,800 point Dow drop in 1 month. Okay, so let's recap before we go to question and answers. Remember, here's the setup if you're going long. You want to see a green bar close below the previous green bar's low. That means that with the PET D applied, you need 2 green bars. The bar number 2 needs to close below the previous green bar's low. If you're going short in this 2-bar technique, you need 2 red bars. And bar number 2 red bar must close above bar number 1's red bar's high. Okay? That's how simple this is. You see how powerful it is. Now, points to remember, as I said earlier, this is a technique only. It is not a complete strategy. In other words, we didn't talk about advanced entry signals. In our courses, we have upwards of 6 to 7 different ways to enter. We didn't talk about stop placement, nor did we talk about where to exit. Once again, in our courses, we have upwards of 6 or 7 different stop placements and exit points. And then lastly, we didn't talk about money management. Extremely important. How many shares should you buy? How many contracts, okay? These all go into making a strategy or a system. This is simply a technique to highlight or to spotlight a high probability entry point. How you decide to enter or exit is totally up to you. Now, ask yourself, because we are at the end here of another year, now ask yourself, I know everyone wants to start out a year thinking, well, this is going to be the year where I finally make it, where that trading comes together, and I'm going to, buy that dream home I've been thinking of, or maybe go on that dream vacation, or maybe just have a little bit of extra income coming in. And usually when you get to the end of a year, your dreams are never realized. Trust me, I went through this. I know exactly how depressing this can be and how frustrating, because you spend a lot of hard work and mostly a lot of your hard-earned money on things that you think are going to work, and you're not seeing the results. 2019 is over now. Do you think the technique can help your trading go into the next year? I mean, trust me, this year is basically over. We're going into 2020 now. Do you think it can help you going into this next year? We have a great attendee discount. And when I mean a great discount, I mean a really great discount for all the people taking time out of your day today to watch this presentation. We're going to offer you the PET D. This is the Primo Early Trend Detector, our roadmap for any market. Now, this comes with the proprietary color bar algorithm. It includes the add-on. If you want to use this for another platform, you can do that. On top of that, we're also going to give you 2 more continuation trading techniques. We're also going to give you 2 more pullback trading techniques that are based off of the PET D only. We're also going to give you a trailing stop technique based off of the PET D. Included with this comes educational correspondence. You'll get my personal email where you can ask me questions whenever you like. This is a great course to start off and get in the right direction with your new trading plan going into the new year. But we're not going to stop there. We're also going to throw in the platform to make it even simpler for you. This is the educational platform that you've been searching for, because everything is 1 click away. Now, included with this, you're going to get a year of our platform. Everything is 1 click PET D access. You're just going to click it on and it's right there for you. You'll also get our enhanced buy sell line. This is what tells you the overall trend. strength of trend tool, over 90 of the most prominent technical indicators, free Bloomberg TV, and great personalized tech support. But let me talk to you about what I really love about our platform is the signal scanner. All right. Here's what you'll be able to do in order to trade this technique or any of our other dozens of techniques we have with the PET-D. All right. You can simply scan on a nightly basis for all the stocks that have a green basis with the PET-D or a red one. All right. And you can scan also futures. You can scan currency pairs. You can scan E-mini. You can scan Bitcoin. You can scan commodities. We have lists of all the major markets in all those different categories. Now, here's an example. If you would have scanned Apple coming into this past week, you would have seen that, okay, all the bars are green. And if you would have scanned using the PET-D for the scanner, you would have seen, okay, since the bars are green, all I need to do is apply that technique Steve taught me. And guess what? Look at the potential you could have had if you'd taken this first setup in about a month ago in October, 40 points potentially to the upside coming into this past week. How about this example in Twitter? Okay, this was in the middle of October coming into this last week in November. You would have scanned and seen that Twitter was colored red. Once you saw that, all you had to do is apply the technique and look at all the examples here to go short right before a 13-point drop. Okay. You can also scan intraday. Let's say you're an E-mini future trader. All right. If you're able to be in front of your computer, you can scan for a E-mini 30-minute chart or even a 5-minute chart. But on this 30-minute time frame, we see that all the bars were green. And once you found the bar that closed below the previous bar's low, you could have taken advantage of those buy setups. That's 10 points or roughly $500 per contract in roughly about a day. How about a 4-hour chart of the euro dollar? Okay, here's the euro dollar in November, coming into this past week in November. Obviously, all the bars are red. Use the technique I taught you. Had you taken this very first setup right here, that's over 140 pips coming to the downside, roughly about $1,400 per unit. Potentially, you could have captured. Remember, some of our students will take this and get out of the first large down bar. Others will try and stay in as long as possible. It's entirely up to you, but we teach you ways to stay in or get out. It's up to you. And then we can look at Bitcoin, okay? We know we have some Bitcoin traders. A lot of students want to get back into Bitcoin. Well, we see originally here on this daily chart in the beginning of November, the bars were green. So we look for our setup, but we don't have any valid setups here. Now the bar, the last 3 or 4 days, turned red. So what's the market telling us? Not some guy in TV, not some guy in a chat room, but the market is telling us, the source is telling us, well, we want to go lower now. The trend has changed. Okay, so we're not going to buck it. We're just going to go with it. We have our pattern here. We have a high, and then we have the next red bar closing above that high. So this is a valid sell signal. Bitcoin fell over 200 points coming into this past week, okay? So let's break it down. You're going to get the Primo Early Trend Detector. That's the PET-D along with 1 year of our platform. This is our roadmap for consistency. This is the roadmap you can use for virtually any market. Comes with all these extra added features, including educational correspondence. So how much would this normally cost you? If you had the PET-D course and application along with 1 year of the platform, this would normally run over $4,700, close to $5,000. We don't want to ask you to come up with that amount of money. We're not going to charge you close to $5,000. In fact, we're only going to charge you a one-time fee of $497 down and then just $97 per month. This includes 1 year of the platform. This is an amazing, amazing offer. I don't think we've only done this once before. This is just for less than $500 and then $97 a month. You're going to get the PET-D. You can start using this technique or the other 5 techniques that we have included with this, okay? Once again, this is a fantastic, a phenomenal, really a great offer today. And trust me, a year from today, you will have wished you became a member of this course. Why not invest in yourself? Why invest in what some master trader supposedly tells you works tremendously, and then the minute you start trading it, it doesn't work? Why not invest in yourself and learn how to listen to the market by using our translator, the PET-D, along with 1 year of our platform? Remember, 12 months totally free. You get all those extra added features. There's nothing else you need, and everything is 1 click away. You get PET-D access 1 click away. So here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. They help me develop the platform. They're also in charge of all of our discounts and all of our tech support with the platform. If you're interested in really taking advantage of this, I would probably call them directly. They have trading consultants manning the phones right now. They know they can answer any question. They know about the Pet D. They can answer questions. I would, really recommend calling them. There's absolutely no obligation. Call them at 310-598-6677. Now, that link you see at the very bottom is the informational link. It will send you to that page, and you will have a lot more information on there about the Pet D as well as the sign up for the $497 offer. But that's not a live link. A live link has just been posted in the chat box on the far right-hand corner of the GoToWebinar column. So you can click that on, and it will take you to the page. But I would most likely say the best bet is simply to call Pro Trader Strategies. Once again, there's absolutely no obligation. Just because you call, they're not going to force you into making a sale. You can get just more information in terms of tech support, in terms of platform usage, in terms of pricing. They would be more than happy to work with you. But this is a great, great offer, and I really hope you take advantage of it because, as I stated earlier, I think we've only had this offer once before since I've been promoting the Pet D, okay? Now, we're at the end of the presentation. I promised I would take each and every one of your questions. So if you have any, now's the time. Just go to your question and answer box, type them in, and I will be more than happy to answer any question you may have. Someone is asking, what if I want to use the platform I use for trading? Well, we can also give you the add-ons for the Pet D. In other words, you'll have to download them onto your platform. And, it won't be as simple as the platform that we give you, the PTS Primo charting platform. In other words, you'll have to download it. And then, as with most platforms, you'll have to click on the indicators, search for it, then click it on. It'll take you, a couple of minutes to find it and do that. With the PTS Primo charting platform, as I showed you, it's one click away. You just click it on and it's right there. So it's so much simpler to use our platform. But if you really want to use your trading platform with it, you can apply it to most of the major platforms such as TradeStation, Metastock, MT4, Sierra Charts, Thinkorswim, NinjaTrader, a lot of different of the major platforms. But you can use it probably simpler, much more simpler on our platform. What I suggest, because this is what most students do, is they just toggle back and forth. I use another platform in order to enter my trades. When I trade, I use that platform. But when I'm looking at setups and signals, I use the Pet D. So I should say, the PTS Primo charting platform. So that's what I use. And it's just simple. Once something appears, then I just go onto the other platform and enter the order. It's that easy. All right. There's not a lot of difficulty with that. Someone was saying, Steve, does this work on currency pairs? Yes, it does. I showed a couple of examples on currency pairs. I think they were both 4-hour charts, but if you got a little confused with that, don't worry. It can be applied to daily charts, to weekly charts, any market, any time frame. I like to use this a lot on intraday trading with the E-mini futures because you can see some nice intraday setups with this. So it makes no difference. That's the way I usually use it, but you can use it on stocks, daily bars of stocks, weekly bars of commodities, intraday charts of currency pairs, monthly charts of Bitcoin. Makes absolutely no difference. Wherever there's a trend, the Pet D can decipher it, and you will see these signals being generated as they are being processed. Okay, I guess there are all the questions. I must have explained everything. Remember, you will get a link to this recording. I would suggest watching this again if you're not convinced how powerful and how much this can help you. But I would not sit on this and say, well, you know what? Okay, I've watched this for the past 2 or 3 weeks. I'll take advantage of that offer because most likely that offer is not going to stick around for a long time. Okay, it's a very limited short-term offer. Remember, less than $500 one-time payment and then just $97 a month. You're going to get the Pet D course along with all those other techniques included, along with all the features on our platform for 1 year. And included with that comes mentoring correspondence with yours truly. You'll be able to email me whenever you like, my personal email, ask me any question, and I will be answering you as soon as possible so that you'll have a one-on-one correspondence with yours truly. Lots of great stuff to help you take your trading to the next level, okay? So once again, there's the link below. I'd click that on in the chat box, or I would recommend calling them directly, excuse me, at 310-598-6677 for more information. As we close out here and take one last look at our disclaimer, I just want to say thank you so much for taking time out of your Tuesday to come see us one day early. We usually have these presentations on Wednesday, but thanks for coming one day early on a Tuesday. I want to wish you all a happy holiday and a great Thanksgiving. And most especially, I look forward to all of you becoming students of mine in the new Pet D course. Thank you so much for taking time out today. Have a great day, and I'll see you next time. Bye-bye.